Mining selling pressure and GBTC outflows increase, but Bitcoin shrugs it off as the price stays around $52,000. Are these ETFs actually starting to dampen Bitcoin's volatility? The European Central Bank releases a blog post saying that Bitcoin has failed as a global currency, and the Twitter community absolutely rips him apart. We expose all the ways that the ECB gets it wrong and teach a small course on Economics 101. Let's get into it. Welcome to the Thursday, February 22nd edition of the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. Here at Swan, we're on a mission to educate the world about Bitcoin. So please like this video and subscribe to the channel to help us teach more people about Bitcoin here on YouTube and cut through all the noise that's out there. And as always, if you have questions, which we continue to get a ton of emails, so thank you for wanting to learn, please send an email to daily@swanbitcoin.com and we're happy to get you taken care of. And with that, let's jump into our episode. It's always great to see Messi back in action. After a several-month hiatus, doing commercials, doing normal dad things, signing a jersey for a random person at an intersection, Messi rejoined with his old buddies, Busquets, Suarez, and Jordi Alba, to defeat Real Salt Lake last night 2-0. Messi got back on the pitch last night, and even at 36 years old, the GOAT was relentlessly attacking center backs with quick passing, unbelievable footwork, and deceptive speed. But you know what was more relentless than Lionel Messi last night? The Twitter community absolutely destroying the ECB, saying that Bitcoin failed as a global currency and it's costly, slow, and inconvenient. The only thing for the ECB social media manager to do right now is to lie down and play dead like this poor fella right here. Here were a couple points that the community highlighted or added some context to that we've talked about before here on the show. Point number one, Bitcoin is not the preferred tool for criminals to do money laundering with. That's actually the dollar in the traditional financial system. Take a look back at this video from head of FinCEN, Brian Nelson.
And we also assess that terrorists still prefer, frankly, to use traditional products and services.
The numbers say there's only $33 being used for money laundering with Bitcoin compared to $20,000 being used for the same thing with US dollars. That's 0.1%. Secondly, the ECB and famously yesterday, Andrew Ross Sorkin said that Bitcoin doesn't represent a legitimate store of value. I don't know how you can say this when this is the chart of the euro being priced in Bitcoin. Bitcoin has gone from a $0 value to over $1 trillion asset that's being adopted by Wall Street firms everywhere, by underbanked people all over the globe, and millions of investors who are clearly opting out of the collapsing fiat system. Bitcoin is making all-time highs in 14 countries. It's beautiful, I know. And sure, you might not be able to buy coffee with Bitcoin yet, just like you can't buy coffee with the home equity line of credit on your house until you have equity in the house itself. And also, saying you would use Bitcoin to buy coffee is sort of like saying you would use Fedwire to buy gas. Let's actually compare Bitcoin to Fedwire. Even if you compared those two, the open source decentralized store of value processes more payments and it does it at a faster rate. Oh yeah, and with no central party in between. Thirdly, there's a thread going through the ECB blog post that says that Bitcoin and Bitcoiners have given up because the ETFs are now a thing. I've seen a couple interviews lately where Jim Bianco says this.
This Bitcoin ETF is giving up. It's giving up. It's saying, you know, that terrible user experience that everybody has trying to figure out how to manage their private keys through a ledger and buy Bitcoin in a decentralized format. And maybe even Coinbase is too difficult to do. Well, I'm just giving up and we're just going to put it on the exchange. And Gary Gensler is going to be in charge of it, is really what's going to happen.
Jim, you do realize that Bitcoin has no CEO, no marketing budget, and no employees who apparently negotiated with Gary Gensler to produce the fastest and best performing ETF launches of all time that are being adopted by people globally at a rate that we've never seen. I'm sorry that this makes you salty, but this is no admission of Bitcoin or Bitcoiners admitting that we've failed or we're giving up. The last I checked, you could still buy, custody, and verify your ownership of Bitcoin through platforms like swan.com in just a couple of minutes. On this show, Jim, we never confuse the difference between number go up technology, which we're all here for, with freedom go up technology, which is real Bitcoin. Let's get back to this ECB article. The last thing that they do, which is using mainstream media's number one tactic of FUD, is that Bitcoin uses too much energy and it's bad for the environment. Countries all over the world, like Ethiopia, are seeing the benefits of bringing Bitcoin mining to their country. According to Daniel Batten, a Bitcoin mining and energy expert, Ethiopia's Bitcoin mining initiative will add 2% to GDP, see them become a hub for technological innovation and sustainable development, and tap the nation's renewable energy potential. The first 200 megawatts are already online. And just 2 days ago, Bitcoin mining hit 55% on the sustainability index, which means 55% of the network is using sustainable electricity to power its mining operations. And why do Bitcoin miners go after sustainable electricity sources? Well, I think Jeff Booth does a good job of explaining this on Brahms' podcast.
We trade with people all over the world, and we try to get even more value. And through that process, prices fall. That's economics, full stop. And things that are scarce because they drive higher prices and higher margins get attacked by more entrepreneurs to create abundance.
To obtain,
and so they never stay scarce for long. Never. The only reason they stay scarce for long is if you create abundance in money. Then if you create abundance in money, then everything becomes scarce.
Yeah.
Scarcity in money through the process we just discussed drives everything to abundance because prices fall to the marginal cost of production. And that's economics. I think that's...
So because the reward is scarce, you are incentivized to innovate.
To attack it, right?
Yeah.
And so imagine things like everything's free in the world, but there's one thing. And so nobody needs to work. Everything's free, but this one thing is really expensive. What do you think people would do? Right? They would attack, like all the people in the planet would attack that one thing.
Economics lesson 101. When there's a sufficient reward or demand for any good or service, entrepreneurs will attack that reward or service to create more efficiency, more products, and more services around that, which overall drive prices down for consumers. This makes capitalistic free markets deflationary by nature. How does this relate to Bitcoin mining? Well, to go after the rewards of mining Bitcoin that come from participating in the network, miners will become more profitable if they have cheaper sources of electricity. That's why you're starting to see Bitcoin mining operations going after stranded or unused energy, like hydroelectric energy in countries like Ethiopia. Or you even have an example like the 2.5 gigawatt operation in Susquehanna, Pennsylvania from TeraWulf. They're using nuclear power plants there because nuclear energy is the cheapest source of energy. Let's throw Bitcoin mining out the window for a second. Think about this. I recently just saw Walmart acquire Vizio. Do you remember back to when big screen TVs were being purchased by your parents when you were a kid? I remember we had this 60-inch TV. It was flat in the front, but it was like 3 feet from the wall because of how big the back was on it. And it probably cost a year's worth of college tuition. Now you can buy a 60-inch flat screen, 4K, fully enabled plasma screen TV for less than $300. And you know what? It's going to last longer and perform better than anything you bought just a few years ago. That's because technology is deflationary. Let's get back to ECB. Just one more thing before we let it go. Why are they talking about Bitcoin when they just posted their first annual loss since 2004 of $1.4 billion, which would have been $6.6 billion more had it not been for some weird accounting tricks that they did? The ECB, like many other European countries, are struggling right now, and their problems don't exist in isolation. The Bundesbank, along with the Swiss National Bank, have all highlighted concerns from higher interest rates. Their leaders will assure you that everything's okay. But remember, there's never just one cockroach in the pantry. Check out the link in the show notes where Swan senior analyst Sam Callahan debunks the entire article from the ECB. It's pretty good. Okay, let's wrap with some news from the Bitcoin industry. For the first time in 17 trading days, the new ETFs had outflows of 36 million, with GBTC contributing 199 million in outflows. But if you've been watching this show, that's old news. You already knew that. We already told you that GBTC was going to have lots of selling pressure because of the Genesis bankruptcy liquidation. We expect that will have a continued impact for at least 2 more weeks. The interesting thing about all the selling that we've seen is that Bitcoin miners have been selling extremely aggressively in 2024, but there's light at the end of the tunnel. This is completely natural as Bitcoin's price starts to rise. Miners will use this cash to pay down debt and fund more operations or buy more equipment with it. But the amount of Bitcoin that they're holding is approaching historic all-time lows, according to Bitcoin Munger. It's a pretty slow day in Bitcoin markets, but you know what? Sideways markets and slow days are good opportunities to continue increasing your learning and increasing your Bitcoin stack. One way that you can do this is by signing up for our free webinar in the show notes with Lynn Alden today at 5 p.m. Eastern, 2 p.m. Pacific. She'll be walking you through different ways that you can think about how to position your portfolio in 2024 and beyond. And with that, we're signing off for the day. This is Dante Cook with Swan.com. Happy stacking.